Good evening, everyone. Welcome to a new video. In this video, we're going to do some macro TA and just have a look at the charts and see what we actually can read off the chart, and that gives us clarity for what's to come. I've taken the Bitstamp chart because I think this chart just gives us the most clear data, and it's respecting the technical levels the most. The way we'd approach it is start from the weekly time frame, of course. So work your way down the chart, the time frames. So let's start off with the volume profile like we always do. We take the volume profile over where price basically rises or rose up from the ashes and started basically pumping, what is it, below $1,000. All right, so around which date is this? End of 2016. We start our volume profile, take it to today on a weekly time frame, and now we can see that the point of control might have, yeah, sorry, a little bit later. So from January. So you take it from the start of 2017. Is that correct? Let's see. Well, a little bit after January. So let's say February. Okay. And if we take it a little bit back, what happens then? It shifts a little bit downwards. Okay, so you take it from February lows, and what you can see is that the pandemic dump stops at this point of control. Okay, so I think that that's a very good starting point for this volume profile. So now you have the horizontal volume profile and you have the volume clusters, so that you can see where the actual Bitcoins were basically changing hands. Now, why do I think that this is a good way to start, and why do I think that this event was so important? Because I was trading this live, and I was trading it on BitMEX, and at the moment that the whole event took place, the pandemic dump took place, there's a couple things I would like you guys to take note of. First of all, the dump happened in a fashion which led to a cascade effect where multiple liquidations were hit, and also all the leverage exchanges halted trading, including BitMEX at 3.4K around that price mark. They actually halted trading. You couldn't sell into the price anymore because those were their actual positions that they were trying to protect. Okay, so this was a very hard-coded bottom, I would say. Okay, so this was a hard-coded bottom, like they wouldn't let price go any lower. Right, so now let's take our the FIPS and take it from the lows to the highs, and something I want to take note of is, maybe I take it a little bit lower, okay, that the bodies close above the 786. Okay, so we basically come to this point of control, and but the candle bodies they close above the 786, and it starts a amazing rally upwards. Now, the next thing to take note of, guys, is that during this whole period, so this is when we kind of were made aware of the pandemic, and we didn't know how bad it would be yet. Okay, so maybe the people who were more in the know, they had an idea. The only idea we could get is from technical reasons, right? Because we weren't aware how bad the situation would be, if we would be buying the lows. But what you can see is right when the news hit, you actually get the biggest rally ever in the markets. Okay, now, of course, there are some economic reasons like printing of money and all of that stuff, which is not a small thing, of course, but you get this event. Okay, so you get the pandemic dump, and actually the worst event ever economically leads to the highest price rally. All right, so you get a double top right here. So let's get more into the more recent price action. And for us to do that, let's take the pandemic low and take it to the high at around 69K. And now what you can see immediately is that price actually stopped at the 786, which is at $17,944. Okay, so that's where we are currently. We're at a weekly time frame, and now we want to get more into the recent price action and see if there's anything more we can get from the daily time frame. Okay, so we can remove this volume profile because it's not loading, and what we want to do is take a new one and take it actually over the, this entirety. So basically the corona pump, let's call it that, where the markets, all of the markets were inflated at the same time. And what we can see is we get a nice little point of control. So there is a substantial amount of buying that has occurred at this level. Another thing we want to do is place some support and resistance levels. So let's take a trend line here and try to fit it over price, and we get some pretty decent fit. I don't want to use the magnet. I don't think it's needed. Just want to have an idea that there is obviously a level of resistance here if you base it on the trend line. Okay, so the trend line is just a good tool to see what trend is in the market at the moment. So what this gives us, I'm missing here one volume profile that's also very important in my opinion, and it's a resistance, so a red line. So what I think is happening here is that technically we have a very, very strong low being put in for Bitcoin around the 17K, 17.9K, let's say 18K, right? Which is also retapping the highs that we had in December of 2017. It's also the 786. It's also a recent point of control of the pandemic event, right? So on all fronts, this is a very, very critical low that we're setting up. And if we were to break this trend line, that's going to confirm that we have some upside, right? And the upside here is big because we had a very, very big retracement from the highs, right? So let's say we would make a 0.5 retracement back up. Right, 0.5 is right here. So let's say we measure that out. You're looking at an 80% increase, right? Let's maybe even go more conservative and try the 382 and see if there's anything aligning there. Well, it's around 37K. These are huge moves, all right? 50% increases in price, and besides that, this could very well be a historical low where we just go higher from here, right? To never even come back to this level. Now, of course, as you guys know, I have a level lower, which comes from an Elliott wave measured move. So that's another target to look out for. So if this were to find resistance at 22.6K, that's where this target becomes more important, and I will be looking and targeting this area. Okay, so we're at a critical level, and how I will be approaching this market is basically looking at the lower time frame, so the 18-minute, 40-minute at this moment, but normally the 18-minute, and I would look for these EMAs to form a certain confluence where I can basically start entering longs, right? So currently I'm counting 5 waves up, so there's no need to enter right now. I would want to see an ABC correction down. Now, if this were to become a small ABC correction where you would have something like ABC, that would be enough for me to enter long on this 21 EMA confluence right here, because the 21 EMA had enough time to basically creep up, and it's currently at 21.3K, which has been a very strong support level. So I'd be watching these levels one by one. First one is at 21.3, second one is at 20.7K. Right, so those are the levels that I would look for support. That's it, and I hope you enjoyed the video. I hope it helps you navigate the market a little bit and make your decision on where to enter and what to look for. And I'll see you guys in the next one. Bye-bye.